Hello and welcome to Prime Investor, where we research and you profit. This is the 8th episode of Prime Q&A, where we answer our subscribers' queries. My name is Gaurav Menon, and today we have with us our co-founder, Bhavna Acharya. Hello, Bhavna.
Hi, Gaurav.
The first question for today is, what should I do if a 5-star fund becomes a 4-star fund? Should I sell?
Okay, if I have to answer it in one line, no. I mean, if a 5-star fund becomes a 4-star fund, there's nothing that much to worry about. So don't sell a fund just because it has dropped from 5 to 4. But the bigger point is that don't go by fund ratings alone, right? Or a change in fund ratings alone. So a 5-star fund, yes, it's performing well against its peers and would be performance-wise doing better than a 4-star fund. But that doesn't mean that the 4-star fund is a bad performer. It does not mean that it is a poor fund, right? It's not divided between just 5-star funds are good to invest in and everything else is not good to invest in, right? So a fund, as long as it is beating its benchmark, as long as it is doing better than its peers and is a consistent fund, don't worry about it slipping maybe one rank or a couple of ranks. Okay, as long as it continues to do better, it means it is still working for you. Okay, now fund rankings and fund performances will change over markets. Okay, that is par for the course. A fund, just because it has dropped from 5 to 4, does not mean that it has done badly. It could just be that another fund has done better, right? So these things keep changing. Fund performances keep changing. It may not be the best today, but it can come back tomorrow. A good fund, a fund that is 5-star today can become 4-star tomorrow. A fund that is 4-star today can become 5-star tomorrow. So don't keep trying to change funds. Don't keep trying to enter and exit funds in the search for the best fund, right? What you will do is to unnecessarily keep churning your portfolio, unnecessarily keep selling funds or keep investing in funds. And this is not good for your portfolio. It is going to impact your returns. So don't keep trying to chase the best performer. You ensure that the fund that you are invested in is better than the market. That is, it is delivering returns higher than the benchmark on a consistent basis, and it is doing better than its peers, better than its category average. So as long as these two conditions are met, it doesn't matter if it's not the best fund. Okay, so you just need to hold good funds. You don't need to always hold the best fund, because what is at the top will keep changing. The second thing to know is that a fund ranking is not, you should not take it as the only benchmark or only reason to buy, sell, or hold a fund. There are limitations to ranking, even if the ranking system is very comprehensive. Like Prime Ratings is extremely comprehensive. We take different measures of returns. We try and take the portfolio aspect as much as we can. But at the end of the day, any ranking system is still quantitative. It is still going to show you only what the numbers say, and decisions on whether to invest or not in a fund, buy, sell, or hold a fund, goes more than just the numbers. You have to take into account multiple qualitative factors. And there are the rating, a fund's rating, a fund's star rating may not show you everything about a fund. For example, it will not tell you what the fund's strategy is, which is important. When you're trying to build a portfolio, you need a mix of different strategies. So it will not tell you what the strategy is. So if you go by, say, the 5 and 4-star funds only, both the 5-star and the 4-star are all doing the exact same strategy, you're simply duplicating your portfolio, even if you're holding top performing funds, right? So that's one thing. It does not tell you what the fund strategy is. It does not tell you whether the fund is suitable for you, right? So the 5-star fund can be one very aggressive fund. You may not be okay with very high volatile funds, right? So it does not tell you the suitability of it. The third, and happens quite often in debt funds, it can mask portfolio risks. Okay, suppose a fund has high credit risk, unless it has seen a credit event, unless some paper that it holds is defaulted or been downgraded and therefore has an NAV and return impact, until that happens, the fund is going to generate very strong returns. It is going to look very good. So no matter how much you weight the credit risk in the rating system, the sheer good ratings will keep sheer good returns will keep the ratings up. Okay, so these are just some examples why a rating is not the only reason for you to change, for you to decide whether a fund is a buy, a sell, or a hold. And just because a rating changes does not mean that you have to change what you're doing with the fund. Okay, so you have to look at different aspects, qualitative, quantitative, put them all together. So if you are worried about what to do with your fund, because a consistency, so from 5 to 4 to 3, if the fund continues to fall, then it's a risk factor that you have to consider. So if you are worried about a fund, what you can do is to simply use our MF review tool. So we have a review tool where we give buy, sell, hold calls on funds that take into account the ratings, that take into account all these qualitative factors, and we give buy, sell, hold calls. So you can simply use a review tool, find out whether that fund is worth holding on to or whether you should exit it. So we link those below. We'll also link an article that we wrote on how to approach fund rating. Like what should you consider before you look at a fund's rating? So use our fund review tool. Don't take ratings as an indicator for buy, hold, sell. Understand what the risks in going only by the rating are.
Thank you for that, ma'am. Now, if you like that answer, subscribe to our channel. Now, our second question for today is, what is your point of view on value funds? Can you suggest one?
Point of view, okay. It's not that value funds are good. I mean, they are useful additions to a portfolio. A value strategy will help. And it's not that you should do only growth or only value. There's no question like that. See, any portfolio, again, at the risk of repeating myself, any portfolio needs a mix of strategies. Okay? That is the only way you will have balance. If your entire portfolio is in one type of strategy, if the strategy doesn't do well, it is going to pull your full portfolio down. So yes, value is a good strategy to have. It works very well, but you also need to keep in mind that a value as a strategy will spend a long time underperforming if value does not work. Because in value, you're going behind stocks that are cheaper. You are going to have to wait until the market sees those lower valuations, until the market picks it up. So all that means a value fund can see a long time where it is underperforming. And we have seen that. So value funds have only been recently coming up. In the past year is when value funds have seen their returns revive. For several years before that, it was not performing at all. So if you held all those funds, you would have seen your portfolio returns just not coming by. So you need to be able to stay that entire period where the fund is not performing. And therefore, you need to have that kind of long-term time frame. So you can use value funds in your portfolio if your time frame for that portfolio is at least 6 to 7 years, right? And the next point to keep in mind, again, go back to mixing styles. So while value is good, while value can perform over time, it cannot be the only component of your portfolio. You should have a different type of fund. It can be a growth strategy, it can be full growth style fund, it can be growth at reasonable price, it can be an index fund, right? But just make sure that your portfolio always has a mix. value, growth at a reasonable price, but it should have a mix so that if one is not performing, the other is performing. So if you had both growth style funds and value style funds in your portfolio, the growth style would have worked. And it would have compensated for the value not working. Now the value is working and growth is not doing that well. So again, it is going to balance it out. So the question is never, should I do value now or should I do growth now? It is at all times, you should have bit of this, bit of this, bit of this. You need to have the time frame. You need to have the ability to see low returns for a good amount of time. So which value funds you should go for? We have fund recommendations in Prime Funds. That's our fund recommendation list. So we have both aggressive value fund, value funds that do slightly mid-cap allocations and value that does large cap allocations. So you can just look up that Prime Funds list. If you see why this fund next to each fund, it will tell you what the strategy is and how to use it in your portfolio, what other type of funds you can mix along with it. So for fund recommendations, go to Prime Funds and yes, have value in your portfolio, but make sure that is not the only strategy that your portfolio has.
That's all for today, folks. If you like this video, hit that like button. Also, subscribe to our channel and share this video. Bye for now and see you next week.